Hey everyone, how are you doing today? We're going to go dig into reverse mortgages, and I have a dear friend of mine who I've known for what 20 plus years.
Yes.
And in our industry, we kind of joke if you've been in the business more than you're a survivor. If you've been in there 5, 10, or 20 years, you're a seasoned professional and can take any questions and still come out as a winner. But anyhow, let's get back to reverse mortgages. Don does specifically reverse mortgages, or otherwise they are known as
HECMs, home equity conversion mortgages.
on that. So, but commonly most people know them as reverse mortgages. And we're doing reverse mortgages a little bit different today. We're going to talk about more of the high-end part of it, whereas if you own some, like a property that around 900 to 1.5 million or even more, it can go up to, I think, 2 or 3, but we'll ask Don more about that, 2 or 3 million. You'll want to listen to this because you probably won't get a lot of information regarding, how do you do it or how do you use a reverse mortgage in the more upper levels of it. But the first part we're going to do is really unpack this and go step by step. Some of this you'll already know, and this will also be a two-parter so that you'll be able to absorb all the information. So the very first question, taking it from baby step one, is what is a reverse mortgage? And as you said, it was also called HECM.
Home equity conversion mortgage. The name reverse mortgage comes from the concept of starting with a house that's free and clear, and you getting mortgage payment or getting payments from the mortgage company instead of you making payments to the mortgage company.
Okay, so that's pretty basic. So you might ask, well, what's the difference between that and say like getting a second mortgage or a HELOC, or some people want to say, well, why would I want to do this? Couldn't I borrow from my 401k or something of the sort?
Yes, you can do any of those things. The difference between a reverse mortgage and some of those other mortgage products is that you have no monthly mortgage payments for as long as you live in the house, pay the taxes, pay the insurance, and maintain the house. One of the big traps as people are looking at these is they tend to look at them in isolation, and you bring up a good point, is that people really ought to look at all these products and say, which one of these should we be using, as opposed to looking at them one at a time.
Okay. Now, having been in the real estate industry, I've heard people talk about reverse mortgages, how they had been, quote, taken by getting a reverse mortgage. So there's a lot of misconceptions. So one of the things we want to chat about is like, what are some of the misconceptions that people have? And I'll let Don talk about. For instance, people are afraid that the bank is going to take the house back, or you're not going to be able to sell the house. And there may be a couple other ones that Don knows of, but a lot of times people feel that it's more of a trap than actually a good financial decision.
A lot of that comes from the fact that either the borrower or the heirs, in many cases, don't understand the product completely. The bank doesn't want the house. They just want to lend some money, accrue some interest over time, and when you're done with the house, have you sell the house, pay off the loan, and walk away with some money. That's the intent of the product. It's never intended to exhaust the equity in the house, in the process.
Okay, so one of the things that we're talking about today is for, if you want to say, the upper end, or people who have homes that are over about $1 million or even more, and if they're completely paid off, or even if they're not paid off, Don will go into more about how to use a reverse mortgage on that. So let me understand this is, have you had people in the past use this as kind of a financial tool for, say, getting some tax-free cash flow, or some wealth planning situations. Have you had any clients that use a reverse mortgage in that sense?
Yes, actually right now, we just went through a blip in the stock market where the stock market dropped dramatically. And one of the uses for a reverse mortgage, if it's in place before the drop, is that if you're taking money out of your investments and you have a market drop like this, you might want to take the money out of the reverse mortgage, and then when the stock market recovers, take that money and pay back the reverse mortgage, because you can pay one down. You can pay it off. I don't recommend paying it off. Just leave a small balance on it. But I have information about how to use it as an investment planning tool.
Okay. So it really sounds like, if you were to look at it, there are various ways you can take advantage of some of the benefits that a reverse mortgage offers, versus thinking, and a lot of times I think people think it's sort of a last resort type of situation if they're not able to get some additional money through like a HELOC or a second mortgage. Am I correct in kind of making that assumption?
You're raising one of the biggest traps in the situation, is that people will make the mistake of thinking that if they can get the reverse mortgage today, they can get it later. And I've seen situations where, for various reasons, in some cases market shift, in some cases because they got a different loan, in other cases because of health issues, they found themselves in a situation where they couldn't get the reverse mortgage, where it would have been very useful to them if they had it in place before the crisis came. Mm-hmm. Waiting for the crisis is not a plan.
We have that a lot of situations sometimes. Well, I won't get into that, otherwise we're going to go down a rabbit
Right.
hole. But let me ask you this, Don. For qualifications for a reverse mortgage, and I'm not well versed in it, but are there national qualifications? Are there specific qualifications if you live in Colorado? Is there some of the basics of course, is there like a age requirement? Some of those, and I'm sure there's financial requirements, but we can talk about those. But just the general qualifications of getting a reverse mortgage.
General qualifications on the FHA product is you have to be 62 and you have to have enough equity in the house. There are non-FHA products that you have to be 55. The FHA products today go up to a maximum lendable value of $1,209,750. That number changes each year. Non-FHA products go up to a $4 million loan amount. So both can fit. We did one on a $2.3 million condo up outside of Aspen for somebody that was a non-FHA product. And even at the lower end, we're working on one now that's about a $500,000 house, and a non-FHA product fits that one as well. So as with any loan, it becomes a case of sitting down and saying, what do you want to do, and what's the best way to accomplish what your goals are. That's what I'm about.
Okay. Well, that's great to know, and actually that was one of my questions, of course, was there one limit? It's funny because I was going to use the example, well, what if you had a home that was 1.3 million, and you just told me that the FHA one is 1.299?
1.209.
1.209. So based on that, you could qualify for either the FHA type of reverse mortgage or the non-FHA.
Right.
On that. And I know you told me at one point, I'm just going to quickly go back in history, I think we're part of the quote, a bad reputation of reverse mortgages. This originally started out as an FHA product back in like the late 70s. Was that when it started?
Became an FHA product in 1989.
Okay, 1989.
I'm told the first reverse mortgage in the country was done in 1961, so
Okay.
it goes back a long time. And what I see is it's a life-changing product for the people that
Okay.
I do them for.
So just to kind of put it in perspective, like everything, when something first comes out, there's a lot of bugs that occur.
Right.
And so people who have told you that reverse mortgages are really horrible, I think Don and I would agree that back in the late 70s and in the 80s, they probably were not as helpful as they are now, because now we have a history of, over almost 50 years where the government has been able to fine-tune it and make it more helpful for people versus it being a product that was not helpful for people.
It's right now it's an extremely helpful product for people. It's one of the reasons I wrote my book, is to tell some of the stories of how people's lives have been transformed, and we still have those going on.
Okay. For a little quick one here, Don has given me a copy of this, which is a book that he wrote that gives you a lot of information, which, as it says, is Why a Reverse Mortgage, Real Life Success Stories. It's written by Don Opeka. We'll talk more about this book at the end and how you can get it. So remember this and we'll get back to it.
Okay.
So the good thing then is, I think one of the questions what people would be asking is, well, if I already have a mortgage on my house, can I get a reverse mortgage?
Maybe.
Okay, so I'll let Don go further into that. There are always a little bit of rules and regulations. We'll cover, kind of the basics on it. So I mean, let's just stick with the example. If your home is worth under 1.3 million, I know you said it's 1.20 something or other.
If you still may, the FHA product may be the best choice even on $1.5 million house. What you have to do is look at the two products and say, what's the cost? What are we trying to accomplish? Because the rules are different on the two products, and really, just like any other financing, it's not a one-size-fits-all situation.
Okay, so yeah, we'll try to take this step by step because it's so
Sure.
easy just to go to different aspects. So it sounds like, as an example, if your house is valued at 1.3 million, and you do have some type of mortgage currently on it, you could get a reverse mortgage. But I'll let Don tell you about the kind of the basic steps of what would happen.
Basic steps. The biggest issue is always whether you have enough equity in the property, and the amount that every lender will, whether it's an FHA or a non-FHA product, is a function of both the interest rate and the age of the borrower. As the borrowers get older, they'll lend you more money. As the borrower is younger, they lend less money. And in general, as interest rates go higher, you can borrow less. As interest rates go down, you can borrow more. The easiest way to answer the question, and I get reluctance all the time about doing this, is simply ask me, I just need your birth dates, how much you owe, and determine what the house is worth, and I can tell you what the real numbers are on any property. And instead of trying to guess about what it's going to be, I can plug it in the computer and in a matter of a minute or two have real numbers for somebody on multiple products. So,
and I actually asked Don, I think it was about 3 or 4 years ago when I just gotten into a new home. And at that time I had a high loan balance, and it did not seem in that time period worthwhile for me to get a reverse mortgage. Now, a few years later, I'll probably be looking at it again and seeing if the timing is right for me to get a reverse mortgage. So
Right.
That's one. So I understand exactly what he's talking about because I actually went through the process, and Don did send me a actually very detailed report as to what the whole process is. So if you're ever interested, Don is more than happy to, go ahead and run that report for you. Now, we were talking about, a home, and when we talk about homes, most people are thinking about what we call a single family residence or a detached home. Are reverse mortgages available for townhomes, condos, people who live in 55 plus communities, those type of situations, or is it just specifically a single family home?
Condos and townhomes are still eligible. Typically the 55 plus communities, people are renting there, or they may be in some other sort of arrangement. They've got to be a property owner in order to do it. It has to be their primary residence. Condos have to be approved. FHA has an approval process, and the non-FHA products have an approval process. Those two are a little different, so it's all part of take a look at a person's situation and tell you whether it's going to fit or not pretty quickly.
Sure. So in this particular case, I'm familiar with Aurora, Centennial, or the zip code 80016, where there are 55 plus communities, such as Inspiration, Hilltop 55 plus, Heritage Eagle Bend is also another 55 plus community where there are homeowners. So the answer then would be yes, because they are homeowners there.
Place like Heritage Eagle Bend, from our perspective, those are just single family homes, and the fact of a 55 plus restriction is largely irrelevant.
Okay, so again, to just make sure, so homes in HOAs are eligible, because
Right.
That's another question people have sometimes, like, well, what if I'm in a covenant controlled community HOA? So we're trying to cover all the bases, let you know that really there are a lot of different types of homes that are covered. Even though we use the word home, we're not just talking specifically about single family residence or that they are detached. So that's really good to know. Now, of course, people are, and you touched a little bit lightly on this, what are some of the qualifying factors? Do you have to be still working? Can you use Social Security? Credit score, that's always a big question. My credit score, what happens if, we were married and now I'm a widower or a widow, qualification wise?
Okay, qualification wise, these are underwritten on income, assets, and credit, just like any other loan, but it's probably the easiest loan you can qualify for. From a credit score perspective, there isn't a minimum credit score. You can't be in an active bankruptcy. And
we've had people try to get loans when they're in active bankruptcy, but that's another story again.
Let's not go there. In general, for most people, if they have enough equity to get one, the income and the asset situation will fit just fine. I don't think I've had a decline because of credit score. I've had income is rarely an issue. I've had a couple where a lady came to me with no income. She had not filed for Social Security and had no income, and that didn't work. But in general, people with Social Security and enough equity can get a reverse mortgage. If they have not paid taxes and insurance on time for the last 2 years, then a life expectancy set aside may be required, which is an escrow payment, and it's pretty big chunk out of the loan, which can affect things. But we did one last year for a man that was 3 years down on his taxes. He had $1,200 a month in Social Security income. The house came to us uninsured and uninsurable. We managed to get the house fixed so it was insurable. we got an insurance policy on it, we got the taxes paid, and we got a life expectancy set aside to pay future taxes and insurance, so it doesn't take a lot of income typically to qualify for one if you have enough equity in the house.
Okay, well, that's good to know, and he threw out a lot of stuff, so again, we're trying to get into detail, but we're also trying to do a little bit, sort of a detailed high level, if there's such a thing on that. So again, if there's additional questions or comments, of course, go ahead and write them in below, or of course, give either one of us a call. Well, actually, give Don a call.
Give me a call. I'm happy to answer questions anytime.
And I can help you on the real estate side. He can help you on the
Right.
loan side. So this is, and people pretty much already know this, I think, and Don has already alluded to it. But for a reverse mortgage, can you get it on a vacation home or a second home away from home? Because some people have that nowadays.
No. The loan has to be on a primary residence. The money from if you took out a reverse mortgage against your primary residence, you could use that money to buy a second home or an investment property. And for example, I have almost $500,000 available for my reverse mortgage, so some condos I might be able to buy for cash using the money from a reverse mortgage.
So you have your reverse mortgage yourself?
Yes.
Okay. And if you were someone who wanted to do some real estate investment and buy a property, you can do that?
I can do that. I can use that money either to pay cash for a property or as down payment money to get a loan to buy an investment property. I could use it as a down payment to buy a second home, or if there's enough room, pay cash for a second home, depending on what you want to buy.
Okay. And I have a feeling a lot of people didn't realize that's one of the opportunities that this helps you in terms of financial planning and a few other things on that. So as a real estate investor, I got a lot of questions to ask about that. Maybe I might go and get my reverse mortgage a lot quicker than I was going to wait a few more years, but maybe now's the time to go ahead and get that, because I do want to buy more properties. But okay, let's get back. Enough about me. Let's get back to the.
But it's what you're alluding to is probably the greatest frustration I have with this product. People don't want to stop and talk about how the product can meet their needs and talk about specifics. Trying to explain it in general terms is great, but sitting down and saying how will this fit your needs, it's like asking Bill, can I buy a house for $1 million that will meet my requirements? And you say, well, why don't we talk about what you're looking for as opposed to just in general terms.
Okay. So this brings up the image to me is like with a reverse mortgage, and don't take this wrong, it's almost like a vending machine with different options of what you can pull out. Some people, like in a vending machine, want like a chocolate bar, and somebody else wants like a potato chip, and somebody else wants like a package of cookies. So again, using that analogy with a home equity credit line, or excuse me, a reverse mortgage, you have the same options. Maybe you're looking for it to supplement your Social Security payment. Maybe you're looking to buy another vacation home that you can first pull out money and then go ahead and buy it and then get a different mortgage on it. Or maybe you're looking for an investment property. So there's more to it than, quote, meets the eye.
More than meets the eye, and like, even if the one other piece, if you're talking about investment properties or second homes, is that if you have a mortgage on your primary residence, using the reverse mortgage to get rid of the mortgage payment on your primary residence may free up enough cash so you can qualify for a loan to buy investment property or the second home as well. Again, we need to talk about specifics more than generalities, and say, what do you really want to do, and how do we get there?
Okay. So again, a lot of information there. Let's make sure people heard. So there are probably, I think, at least 4 different requirements for you to be able to find out how much of reverse mortgage you can get. So one of them, I think you said, was the value of the home.
Right.
On that. Second one is tied to it, of course, is what the current interest rate is.
Right.
Okay. The third one would be if you have a mortgage on your home now, what the loan balance is, and if
Right.
it could pay off.
Right.
And then obviously, if it's free and clear, then one of the other things that you had talked about is the age of the person.
Yeah, the borrower's age is critical.
Okay.
And in the case of a husband and wife, on the FHA product, one can be over 62 and one can be under 62
Okay.
To qualify. So both don't have to be over 62.
Okay. And then, as you said, if they get older, well, which we all do, by the way,
Right.
It's not like we have a choice. But when they become older, let's just say they were unaware of this at 62, but now they're 70 or 75 and they heard about it, then they could potentially get a larger reverse mortgage than if they had gotten one when they were 62. All
Correct.
things being equal.
All things being equal, they would be able to borrow more. My oldest borrower was 104, so.
Oh, wait a minute, say that again?
My oldest borrower was 104.
So it's never too late.
No. She was 104 still in her first home.
Oh my gosh. Wow, that's incredible.
Right.
Amazing. Okay. So we briefly talked about it, but I just want to bring it back out again. What is the dollar caps right now for the 2 different reverse mortgages, the FHA mortgage and the non-FHA mortgage? What are the loan caps right now?
The loan caps,
With the ideal person, if everything was.
unlike a forward mortgage where you've got specific loan to value limits like 75, 80, or 100% loan to value, the reverse mortgage doesn't work quite that way. Instead, if you want to know without my computer software, then you can go to the FHA website and look up the tables and go in with the interest rate and the borrower's nearest age, nearest birthday, which is a hard way to do it, or you can call me and I can just plug the numbers in the computer and it spits out how much you could borrow. It's not a...
So I asked the question the wrong way. You had originally said it. For if you were going to get an FHA one, it can go up to 1 million.
The maximum lendable value is $1,209,000. So if all that means is that if the property's worth $1.5 million, FHA will treat it as if it was worth $1,209,750.
Okay.
But you can get an FHA loan on a more expensive property. It just is that they cap the amount. The appraised value will be effectively is capped at that number.
Okay. And then for the non-FHA, you had given another number that was
$4 million.
$4 million. Okay. So I hope that was not confusing. I asked the question the wrong way of what I'm looking for, but the effective.
The real answer to your question is call me, let me plug the numbers in, and I can have you the real numbers instead of the general numbers.
Okay.
Because the numbers are changing every week with interest rates, and we really need to work with real numbers.
Okay. All right. I won't put you on the spot, and we won't get into a bunch of rabbit holes on that one.
Try to stay out of that.
Right. So again, I just kind of I want to recap these two things, and then we'll go on to part two. Is one, the funds from a reverse mortgage. I think you had alluded to it. There's maybe 2 or 3 different ways you can take the available money from the reverse mortgage, such as can you take like a lump sum out, that type of situation?
You can take out a lump sum, you can have a line of credit, or you can have monthly payments, or some combination of those 3.
Okay.
Go ahead.
No, go ahead.
One of the things to get one ahead of time, particularly for somebody that has a house that's free and clear, is that FHA caps the amount that you can get the first year at 60% of the total. So they've got some caps on it to protect borrowers, so they can't just take it all out and go to Central City and
like the lotto, where we hear
Right.
a lot of lotto people, winners get millions, and all of a sudden in
It's all
like
gone.
3 years or less, all that money's gone.
So those
So-
restrictions only apply the first year, but if you're gonna use it for things like we've talked about, investment properties or a second home purchase, it probably need to get it in place at least a year before you wanna do the transaction, so you have access to all the money.
Okay, it's good to know. And we sort of talked about, but I just want to make sure that this is an affirmative. So you could get a reverse mortgage to buy a second home, but could you use a reverse mortgage to buy a new primary home? Does that make sense, my question?
Yeah, you can use a reverse mortgage as a purchase money loan, and probably the easiest way to understand where that would fit is somebody has a home that's free and clear, and for example, one spouse dies, the surviving spouse needs a change in scenery, or they need to move to a different part of the country. They want to move to a house that's the same price, and they may not have the cash to cover closing costs and moving costs and so forth. So they can sell the house that's free and clear, use a reverse mortgage to buy something else that's in the same price range, and the reverse mortgage can backfill those closing costs, and they still have no mortgage payment after they've moved. So that's an easy way to understand how a purchase could work. You can buy basically any kind of house you want. You just need a large down payment, and again, down payment will depend on age and interest rates at the time.
Well, Don, I'll tell you, I'm glad we went through just the basics of it. I actually learned a few more things that I had not realized. And you and I have been chatting over this for
Years.
on that. So I was learning always something new. So again, Don, thanks for joining me on this. And so what we're going to do is we're going to go into part 3. So hopefully everything we've talked about this first half has kind of opened your eyes to let you know that there are a lot of different options with reverse mortgages, and how this particular product could maybe fit a bigger financial picture of what you want to accomplish for yourself or for your family. So stay tuned for part 2, and we will be back. Thank you.